Hi everybody, welcome back to another video. So in this video, I'll be sharing about my experiences in the Reits Symposium, and this is the first time that I've been going as well. And to be honest, it's much better than expected. For those who are new to Reits Symposium, it is an event where REITs promote their companies and raising awareness to people who are new to REITs. So throughout this event, it was packed with many arranged talks, and you can spend time talking to the different REITs of the booths. One of the most important things that I feel people who invest in REITs should do is to grab the opportunity to ask the REITs some burning questions that you have. For example, I've managed to get information from KIT which were not shown in the earnings results, and I also gave suggestions for them to be more exposed to retail investors. So what are the key takeaways that most REITs are currently doing? Firstly, most REITs mentioned about doing asset enhancement rather than acquisition due to high cost of debt. Secondly, most REITs are aiming for triple net lease, which would benefit them due to rising utility costs. Therefore, with this new lease, they will transfer the expenses to the tenants. Lastly, one of the most important takeaway that I feel is the importance of having a green building or green assets, because it has a few benefits such as tax benefit from government, lower operating costs of building, which will benefit both tenant and REITs itself. And lastly, demand for green buildings are higher due to large MNCs being influenced by the government. Therefore, REITs with lots of green certified buildings are able to get higher rental incomes. So through this REIT Symposium, I've used the opportunity to actually talk to some of the company's people. And from there, I've managed to get some valuable information that I'll be sharing with you now. So the first question I asked was why there was a huge difference in the performance between the European onshore wind farm and the German offshore wind farm. So firstly, they mentioned that European onshore wind farms produce wind energies that are not as stable as compared to the offshore ones. Moreover, they are sold to local grids which are more greatly affected by the fluctuation of gas prices. So therefore, if the Euro gas prices comes down, their income will be affected as well. Whereas for the German offshore wind farms, their prices are more or less fixed, or at least there's a base cap to be a safety net. The next asset is regarding their Senoko waste plant. So as you know, the concession is expiring soon, so therefore it's a risk that the government might not actually extend the concession, because they have mentioned that there is actually a new waste plant being built. Since it is old and not efficient, government would not want to continue with this Senoko waste plant. But the good thing is that because of COVID, there's a delay in the construction of the new waste plant to be commissioned. So therefore, the Senoko waste plant might be able to have a small short-term extension. So another important asset that is still awaiting to be approval is the Marina East plant. So currently, they have mentioned that it's still pending PUB approval. But financially wise, when it was questioned, they have mentioned that only 40 million will be required to be paid in cash, while the rest can be taken or will be taken as debts from the government at AAA plus asset rating, because this is due to it being an essential asset for the country. So therefore, it's a win-win situation for the shareholders. So next, let's talk about Keppel Pacific Oak REIT. As you know, US REIT has been badly hit. However, when I questioned them with regards to the performance of the buildings for Keppel Pacific Oak US REIT compared to Prime and Manulife, they are actually performing better, or in terms of valuations. However, they have stated that because due to different states, therefore it's hard to compare paper to paper values. More importantly, they are sounding quite optimistic with regards to physical occupancy. They have said that tenants are actually asking their employees to come back. Another thing that they have pointed out is that if the employees are scared of losing their job, they will come back. So therefore, we will have to continue looking at the improvements in the occupancy in the subsequent quarters. So through this event, some REITs have actually caught my attention, and I will be subsequently doing more research on them and sharing with everyone. So the first REIT will be AA REIT. If you are new to them, they are actually quite a big decent REIT that is having assets in both Singapore and Australia, with mixture of logistics, of assets from logistics to light industrials, business park, high-tech and general industrial, similar to Mapletree Industrial Trust. So one thing that caught my attention was their huge rental reversion of 19% based on last year's results. And this year, they expect to have a good rental reversion as well due to their passing rent much lower than the market rents for hot industries, which is their logistic and industrial assets. If you look at their renewal rates, with 18% of the assets that needs to be renewed this year, expect them to get much more income. Another interesting REIT will be Elite Commercial Trust, which is a purely focused in UK commercial REIT. One of the selling points that they have is that 91.5% of their rental incomes actually comes from the UK government, which essentially meant that the income is guaranteed. However, one of the biggest risks or one of the big risks that I see in this REIT is that their gearing ratio is at a high level of 46.6%, and their reasoning was due to rising interest rate. So this is a risk that needs to be accounted for if you believe that UK interest rate will continue to rise. So the next REIT that I would want to look at is Sabana Reit. So Sabana Reit is the smallest REIT in Singapore, which meant that there are more potential for growth. Their CEO actually mentioned about how during COVID there are supply chain disruption. So because of this, products manufactured in Singapore were unable to move overseas. Therefore, they have benefited greatly as space has to be rented to put these supplies. Because of this, fresh tenants were created in different sectors, and they are constantly doing enhancement to their assets to increase their rental charges, thus allowing higher rental reversions, which is shown throughout the years. However, one big risk or issue that I see with Sabana is their controversy with ESR REIT that needs to be looked into because they have the same sponsors. The next REIT I will want to look at is Cromwell Reit. So Cromwell Reit is a mixture of logistic and industrial and offices in Europe. So the interesting thing about them is that their rental reversion and occupancy actually went up even for their offices buildings. So during the talk, the CEO mentioned about how important green certified office buildings gave them as an advantage. Due to Europe's push for green buildings are in demand for tenant rentals. Because of this huge demand or shift to green buildings preference, their buildings are actually experiencing a positive rental reversion unlike the US offices REITs performance. So the risk is similar to many REITs and especially in Europe is that I'm seeing UK and Europe to continue increasing their interest rate due to high inflation, unlike the US where the inflation will most probably come down. So a pause in the interest rate might be expected in the US, but unlike Europe, which is still currently at a very high level, might experience more rises in interest. Lastly, another two interesting REIT that caught my attention is Capital Land India Trust and another small US REIT called United Hampshire US REIT, which has the ticket symbol of OBDU. Because of its low trading volume and being very quiet, it's quite hard to find in the search tab. So in conclusion, I feel that this event is very important for people who are interested in REITs. Whether you are going to learn or getting more information, both are important and you can spend a day there getting valuable information. So in the future, I would recommend or would feel that going for this event is definitely worth it. If you're an experienced REIT investor, preparing burning questions that you can ask your REITs of interest is also very valuable as you can get more time to talk to them and more privacy. So this will be able to allow you to get more information and being more confident in the REIT. Thank you so much for watching. If you have enjoyed this video, please hit the like, subscribe, and comment on what other REITs that you are actually interested in as well through this event. You can also watch my most recent analysis on Mapletree Industrial Trust while waiting for my new videos. I hope you have enjoyed it and I'll see you in the next video.